Hello and welcome everyone for another weekly market commentary here from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hello.
Hey Freddy. Before we get started on the latest news items that we're going to cover today, quick housekeeping items. We have a few events coming up in both Singapore as well as in Malaysia. In Singapore on the 27th of November, we have an event on how to plan for your retirement. So we talk a lot about optimizing your CPF as well as looking at other options such as SRS and those things. You can sign up for that on our website at stashaway.sg/academy. You can also find out more about this on our Facebook page as well as on our Singaporean Eventbrite page. In Malaysia, we're going to have an event on investing for women. That is actually on the 21st of November. And again, you can find out more about that. You can sign up for it on our website, stashaway.my/academy, or Eventbrite and Facebook as well. And if you have any questions, feel free to email us at support@stashaway.com as well. So much so for the events, Freddy. Let's talk about some of the events that have been happening the last week since we spoke. There's actually two big anticipated speeches, right? One was last night by Donald Trump, and then the other one is coming from Powell, right? He has to testify the usual monthly thing. Both very anticipated because markets are at record highs. So let's delve into a little bit about what Donald Trump had to say yesterday, right? And what kind of impact that might have on all the topics we've been talking about all year, right? Trade deal,
Nothing new really, except that, it came from the entertainer himself. It's still about trade. Much ado about, we're going to see a trade deal with China soon, but we're going to do it if it's great for America. And if we don't have a deal, I would massively ramp up tariffs again. So the so-called rollback of tariffs was put in doubt by Trump himself, right?
Yes.
So temperament in the market is sort of slightly lower than a couple of weeks ago, but this is a very short-term noises.
Yeah.
Right?
Do you think it was just because he wants to make a point that he is the one in charge of the negotiations because of all this good news that's been coming out from the Chinese side, right? We're getting close, rollbacks are apparently inside the deal, right? And now it's not so fast, right?
It's unusual because for the first time it's the Chinese who announces something because they're so afraid or so mistrusting the way Trump negotiates. Yeah. Normally the Chinese would not even say if there's any progress with him until many days later. Yes. But this time the Chinese went ahead. Something must have happened, but for Trump to come and introduce more uncertainty with rhetorics, again, that's not trust building, right? So the market didn't really like that. Now on the second note, the other thing that he always does in any speeches these days is to attack the Fed.
Correct.
Wow, look at the other countries.
Especially then speaking tomorrow, it was the next topic, right? So
we have negative interest rate in so many places in the world. Give me some of that, right? So he says that, and yet again trying to pressure the Fed into cutting interest rates more. I don't think the Fed cares. It's supposed to maintain its independence. So again, much ado about nothing, just entertainment value.
Yeah, mostly, right? Another few headline news, right? Anything you expect from Powell to come out of his testimony at the...
I think the Fed and Chairman Powell himself has become quite adept at not creating volatility in the markets.
Yeah.
So it's become, I think he's learned his lessons from the early communication failures. I think there wouldn't be a lot that the Fed would offer other than that rates is on hold, that they're always ready to support when necessary. So that really don't say a lot.
Yeah, I think that calms the market a little bit, right?
Yes.
Compared to when he took over, right? From Yellen first.
The less they say, the better.
Correct, exactly. So let's see about that. Again, short-term noise, right? So let's not get too bogged down on all these headline news. But the other thing, if we come back over here, over the big pond, and talk about Asia more specific, over the weekend or on Friday, there was the first fatality in the protest in Hong Kong. It's been really getting out of control the last few days. Anything you have to say, or maybe tell the people in terms of investments as well, right? Like, kind of how does it all fit in? Because it's getting quite aggressive now, right?
Well, first of all, condolences to to those who was deceased or injured in the incidents. But we do have to say that the death tolls or even the injury tolls, in particular in the Hong Kong protest, is significantly lower than what would have happened in other places in the world. Yeah. So in a way, however, the noise online, the amount of fake news on YouTube and just amazingly lots.
Yes.
So there's just been a lot of hearsay and fake news. So, and one should not really overread into it. What does surprise us is how the violence and the mob behavior is on the rise. So that's something that investors would take notice. Malls been fired at with tear gas, office workers were disrupted, and so schools again on Thursday is going to be closed, suspended for Thursday. It may go on longer than expected. So the whole situation is just a lot of what we should not ignore is that violence on the rise, and that could really, going on for too long will cripple the economy.
Yes.
But it's isolated to Hong Kong in particular, and not all stocks in Hong Kong would be reactive.
Correct.
Again, it's an export-oriented country.
Just because they're traded there, a lot of stocks are also traded from mainland China.
That's right.
They might not be affected just because of that,
Yeah,
right?
Maybe you would say the retailers would be affected, maybe property stocks would be affected, a few places would be, but in general, it's still a very isolated thing to some parts of Hong Kong markets.
Okay, thanks Freddy for that. I think it puts a little bit more into perspective here. Let's shift focus, let's go Singapore. Let's talk about REITs. I know there's been some, like sharper moves over the last couple of weeks, right?
Yes.
Maybe you want to put those into perspective, and also knowing that, we also have portfolios that are now include some Singapore REITs, right?
Yes.
Maybe just give a little bit of your view on that.
Well, what's interesting is that it's a fantastic year for REITs so far. And it's gone up so violently. Perhaps I haven't heard very good reasons in the market. To me personally, I don't buy most of the cited factors for the recent drawdown. As you knew, in the last 3-4 trading sessions, the Singapore REITs ETF, let's proxy with the ETF, which tracks the index, came down by about to a maximum of 4.2%, but it has since recovered. But it's still down 3.6% versus its peak. However, don't forget that for the year, REITs are still up in general between 16 to 28%, and some specific REITs even gone up by as much as 40%, and they're paying up yields of, some REITs can even pay up to 7% in yield, right? But for the S-REIT ETF, it pays about 4.5% to 5% in yield, right? And so generally it has its function in the portfolio, and you shouldn't think about it as a short-term sort of a reactionary asset class.
Yeah, and I think let's talk about also when you were just talking about yield, right? So investors should also be knowing what and the reason why they're investing in something, right? If you're investing for something that is supposed to give you an income, do you really need to overreact on short-term market moves? You're not in it for the growth portion of it, right? You're more so in it for the yield portion.
Actually,
right?
That's a fantastic point of view, because it's part of the income-generating portfolio, one part of it, and this part produces very steady income-generating capabilities. Right. When the price of these securities goes down, the income remains relatively unchanged. Your yield just went up. Right. So I'm not surprised to see actually buy on dip behavior emerging very soon, because it's an anchor asset class for someone who wants to create a stream of income for their lives, right? Yeah. So I would, again, great point. I would not urge to overreact to these things, or even buy these things on a short-term sort of, looking at movements, but you should think about it as income. Yeah. So that would be our recommendations.
Yeah, exactly. Well, thank you so much, Freddy. I think we covered quite a lot here. Freddy and I will be both back with you next week, see what Chairman Powell will come up with, or if there's any other developments in Hong Kong, etc. But make sure to tune back in next week, and we'll be both back with more. So otherwise, have a wonderful day, and we'll speak soon. Ciao.
Ciao.